Hello, I'm Candace Sherman, and I'm here with Adam Sussman, Director of Research with the TABB Group. Adam, welcome.
Hey, Candace.
Adam has just published a very interesting report on Treasury, the Treasury market, and on-the-run Treasury Notes. Adam, you draw some interesting parallels between what has happened recently in the Treasuries market and what the market structure for equities looks like. Can you tell us a little bit about that?
Sure. I came into the report as really an equity snob, someone who's been in the industry and studied price-time priority and the changes that have occurred in the markets. And, I think we always go around thinking, oh, U.S. equities, they're the most efficient market in the world. And what's interesting is that the more I learned about the way that Treasury notes trade, and the different mechanisms that are in the system to allow for size discovery, and comparing that to some of the block trading systems out there in the equity markets, the more it seemed like maybe the Treasury markets are a step ahead of equity markets, not a step behind.
Interesting. And given all of the discussion about potential reform, financial markets reform, what impact might that have on what you're seeing in the Treasury market?
Yeah, well, I'm sure the folks in the Treasury market are going to hate me for saying this, but what I find interesting is you have folks like Senator Kaufman out there, putting pressure on the SEC to look at flash trading in the equity markets. You've got the SEC with its concept release really questioning the last 10 years of equity market structure. You've got all sorts of regulatory concerns on OTC derivatives and the amount of systemic risk they pose to the system, and moving those to some more electronic trading. And yet no one's really talking about treasuries, and this is a market where arguably our entire economy depends.
Sure. And so is that maybe why they're not looking at it too closely?
Yeah,
it's just too big to fool with? Or?
Well, it could be. It could be that no one really wants to introduce change into such a critical part of the economy at this moment in time. And it could also be that, that the Fed and that, the other folks that oversee the Treasury markets, are more comfortable with the kinds of mechanisms that exist there, and so they just might be a more sophisticated regulator and kind of understand the nuances of how liquidity is created.
Interesting. Give us one or two other sort of sizzling highlights from your report that folks might be interested in.
Yeah, sure.
Reading about.
I mean, one of the things just for, I think folks that are very familiar with the markets, with the Treasury markets, might not find this interesting, but what I found interesting was, this concept of a workup within the interdealer broker platforms, where when a buyer and seller agree to trade, basically the market is frozen for a moment, and they're allowed to negotiate electronically to increase the amount of size that they want to trade with one another. Whereas in the equity markets, it's strict price time. If I post 100 shares to buy, you post 100 to sell, we interact, we're done, and any further volume that we want to execute, has to go in line. Behind any other orders that are at that price. So I just thought that, here's an interesting part of the Treasury markets that allows for liquidity discovery or size discovery that doesn't exist in the equity markets, and that, when mutual fund, equity traders complain about the lack of blocks, well, here's something we can point to that already exists in a market, and maybe that's something folks should look at.
Well, I've been talking with Adam Sussman, Director of Research for the TABB Group. His full report on Treasuries can be found on the homepage of TABB Forum. And thanks for joining us.
Thanks.